Glad to have you back. It's the Business Daily right here on Trust Television. Of course, we're looking at a very important topic, housing deficit in Nigeria, and of course, mortgage financing. Of course, Nigeria, Africa's largest economy, face a significant housing challenges characterized by huge deficit in housing supply, inadequate infrastructure, unaffordable housing option for many citizens. There, with a housing deficit of over 28 million, the expert operators have continued to harp on the need to drive a mortgage financing scheme that will not only provide affordable housing to Nigerians but also ensure it is sustainable. There, let me speak to my guest before I take that report. There, my guest is Dr. Musbahu Ahmad. He's the MD CEO, Kebbi State Housing Savings and Loans Limited. He joins me virtually from Braining Kebbi. Good morning, Dr. Ahmad.
Good morning.
It's a pleasure to have you all the way from Braining Kebbi. Talk to us about issues around housing. I mean, the deficit in Nigeria is very huge, 28 million. I mean, how can this be addressed?
Thank you very much. It is a pleasure to be on your program today. As you rightly said, housing sector in Nigeria is faced by challenges of huge housing deficits. But before that, I would like to take you to memory lane of housing mortgage financing in Nigeria. Mortgage financing in Nigeria has evolved over the decades, largely shaped by economic policies, regulatory frameworks, and financial sector reforms. So, if you look at the historical evolution of mortgage sector in Nigeria, you can categorize it into three phases. The first phase being pre-independence to 1970s, second phase being 70s to 1990s, and the third phase being 2000 to present. What happened in these phases? In the first phase, that is the early years, pre-independence to 70s, mortgage financing was largely informal, meaning to say that if you want to own a home, it is through personal savings, cooperative societies, or family contributions. These are the sources of owning a home then. Though after independence, an effort was made to formalize the sector, but it is largely inaccessible to Nigerians due to stringent conditions and high interest rates. During the second phase of mortgage financing in Nigeria, we witnessed formalization of institutions, formalization of the sector. For example, in 1977, Federal Mortgage Bank of Nigeria was established to provide credit facility to mortgage institutions and promote home ownership. Likewise, we witnessed a reform in 1992 when National Housing Fund Act was established to mobilize funds from workers and channel it towards financing mortgages in Nigeria. Also, during this phase, several primary mortgage banks like Kebbi State Home Savings and Loans Limited emerged. Kebbi State Home Savings and Loans Limited was incorporated in February 1995. We have over 3 decades now of uninterrupted mortgage services to the teeming populace of Kebbi State. During this period, we provide a lot of housing to the indigents of Kebbi State, both living within and outside the shores of Kebbi State. For example, through collaboration with Federal Mortgage Bank, we access mortgage financing to all indigents of Kebbi State that got housing allocation in Godangwaji quarters. That is the oldest quarters we have. It is even formally called Shagari quarters. Right. So we package all the loans. When those civil servants were allocated the houses, we package all the loans. We approach Federal Mortgage Bank And we got financing from Federal Mortgage Bank to NHF. We fed back the state government its money in lump sum, and we spread the repayment of the loans over a long period of time so as to afford those beneficiaries to pay over 25 years from their monthly pensions without having difficulty. Today, they are all homeowners. Likewise, we have Loan 2, which we call Loan 2, where we access finance from Federal Mortgage Bank through NHF for all the indigents of the state who got housing allocations in Gesi Housing Estate Phase 1. Today, they are all homeowners, just like their colleagues from Godangwaji quarters.
All right, Doctor.
Also, we access Loan 3 from NHF, where we package loans for all the beneficiaries from Gesi Housing Estate Phase 2 and some of the Eastern Bypass Housing Estate. All of them, as I'm talking right now, are homeowners. So that is the contribution we have given. Likewise, indigents of Kebbi State who got housing allocations to do outright purchase that are working with federal government and are residing in federal capital territory, Abuja. When they got the allocations and they don't have the fund, because the problem with mortgage is that it is a capital intensive in nature, it's a capital investment. When they got the allocation and it is outright purchase, they have no option. They don't have money to pay back the federal government. Then they formed an association. They approached Kebbi State Home Savings and Loans Limited, being an indigent of Kebbi State, working with the federal government. And successfully, we finance and repay back the federal government, separate it over a long period of time, 25 years, the way they can afford it from the monthly repayment from their salaries, and they successfully repaid all their loans. So these are some of the contribution given by Kebbi Home Savings and Loans Limited during the second phase of formalization, establishment of formal institution in the housing subsector in Nigeria. The third phase in history is reforms that have taken place and liberalization of the sector, which took place from 2000 to present. That is where we are. Reforms such as 2004 Pension Reform Act, which establish access to your part of retirement savings account in order to finance mortgage loans. A subsequent amendment that was made in 2022, which specifically allocate 25% or gave access to 25% of retirement savings account as equity contribution, which is the greatest bottleneck to the first-time home buyer. As a first-time home buyer, if you approach a primary mortgage institution like Kebbi State Home Savings and Loans Limited, you will be asked to contribute 25% of the amount you are looking to buy a home. So that 25% equity contribution serves as bottleneck to Nigerians. But with this reform and the subsequent amendment in 2022 that allowed access to 25% RSA, that has increased the supply of housing in the mortgage sector in Nigeria. Currently, Kebbi State Home Savings and Loans Limited is facilitating access to this 25% to its clients or to its customers. We are doing that. So any retirement savings account holder, Kebbi State Home Savings and Loans Limited is working in collaboration with pension fund administrators and other the access to 25% RSA in mortgage lending.
All right, Doctor.
Equally,
let me butt in here.
Yes.
Let me ask you with regards to what is the qualification for Nigerians, I mean, for them to be able to access mortgage financing. There are a lot of stringent conditions that a lot of people cannot access. Can you, give us an understanding of what, one need to have to be able to have access to mortgage financing in Nigeria?
So if you approach a primary mortgage institution, mortgage bank like Kebbi State Home Savings and Loans Limited, and you would like to have a mortgage loan, the first of all, you need to have, as a lender, we are much concerned about source of payment, how we get our money back. Are you a self customer, or is it a partnership between a estate developer so that you develop an estate together? Then there's security, what we call collateral. You have to have your title. That is the issue of titling. If you have your title and you have a source of repayment, then you have equity contribution, which is now provided by access to your 25% retirement savings account. Then you are good to go. If you approach any primary mortgage bank like Cape State Home Savings and Loans Limited, they will put you on a guide on how to access mortgage loans in order to be a homeowner, just like any other Nigerian that is aspiring to have a house.
Indeed, interesting, Doctor. Let's take this report. Just hold your thought there. There's a report about the soaring housing cost in Nigeria. About the report did talk about the cost of rent is going high. The cost of buying houses is also going high as well. Let's take this report and how necessary will it be for Nigerians to own their own homes with regards to the current increase in rent payments. Don't go away.
Inflation in Nigeria hit 33.7% by May 2024, driving housing costs up at an alarming rate, with rents consuming 50 to 60% of household income in cities like Abuja and Lagos. Yusuf spoke to FCT residents about how they are coping with the financial strain.
Okay, I was paying 300. Now I'm paying 500 for a roasting container in Kubwa. It's just crazy. I don't even know how some people would even cook. Like for myself, I have to adjust.
That has affected almost all the stratas of societies in this country, and of course, let me just say it's now becoming like times 5. Then I used to pay Waira 50,000, but now it's now 580,000. The opposite Galadima, called Shali Boy Buster, called Dawaki. That is the opposite. It's just a village, but very expensive.
His landlord just increased his house rent from 1.4 million naira within the Kogoma axis, Sonville axis, to 3 million naira. Lawmakers to know that they have a work to do. They have a work to do. It can increase the house, using the particular one as a case study, and to others as well. So they have a work to do. That'll be a regulation. It's not good for a tenant to enter into a house today, this year, just spend 1 year, the next year, the landlord increased.
Housing experts Onoja Peter and John Biggs shared their insights on possible solutions to address the escalating rent crisis in the country.
The number one major thing that affects everything is the price of fuel. If the price of fuel goes down, the cost of artisans moving to the site, transporting to the site, will go down. They will not charge high again. You understand? The cost of those traders selling goods like the cement, the iron, and everything, the cost of transportation from the company to their warehouse or to their shops, it will go down. You understand? Which will same thing apply to the cost of that goods.
Government involvement and investment in mortgages, you understand. Let's start with civil servants, for instance. Look at the policies of government with regards to housing. In the last 10 years, how many houses has the government at any tier, you understand, built, mortgaged, and what funds have been made available to workers in Nigeria to be able to own their homes? You understand? So these are the things you look at, and these are the things that can control, you understand, and help to mitigate the high rising price of houses in FCT, for example. I don't know if you get what I'm saying. So we need to go back to mass housing. You understand? I'll be given to people at mortgage level and they can pay slowly. Best at not more than 1-digit interest rate.
According to The Guardian, 108 million Nigerians are without proper housing and 24.4 million people are homeless. As rent prices continue to rise, this number is expected to grow, urging the government to take immediate action.
Wow, interesting report there. I still have Dr. Ahmad with me, joining us all the way from Kebbi in Kebbi State. Doctor, I'm sure you listened to that or you watched that report there. I see Nigeria raising concerns about the cost of housing in Nigeria. Do you think the mortgage system we have in Nigeria has the capacity and design to provide the kind of housing solution that Nigerians need?
Actually, unless if the system is being improved, though the system remains work in progress, we have a lot of reforms that are currently ongoing within the system. And the reforms, I believe, at the end of the day, will address the supply challenge, which contribute to the housing deficit. As you rightly said during your introduction, of over 20 million housing units in Nigeria, over 28 million housing units in Nigeria. That is the deficit estimate. So if there is increase of players, increase of supply in housing unit, for example, apart from NMRC, there are family homes limited that is playing a vital role in trying to see that the housing gap is being reduced. The deficit we have of over 28 million housing units is being reduced. Recently also, federal government through MOPI, that is Ministry of Finance Incorporated, have come up with one program that they coined as MRIF, that is MOPI Real Estate Investment Fund. It's a trillion naira investment fund that tries to give mortgage to primary mortgage banks for onward lending to Nigerians at a single interest rate. All this effort, if properly implemented, will reduce the housing gap and reduce the burden of paying rent to Nigerians, as rightly complained in your report. Also, the high interest rate of mortgage and the inflation, as rightly complained in that report. I belong to a school of thought that believe there is no reason why to limit the tenure of mortgage loan to the life of the person that is taking the loan. Because the house is safe, the home that will be built by that loan will outlive the life of that very particular individual that takes that loan. So why not extend the mortgage loan throughout the life of the home? We believe a home that is properly constructed can live up to 100 years and beyond. Why won't we separate the repayment so that there will be ease on Nigeria? Even if the first borrower dies, he has his heirs that will inherit the house. So they will continue from where he stops. All these initiatives, if implemented, will contribute in the reduction of housing deficit in Nigeria and ease the burden of paying excessive rent by Nigerians.
Indeed, they also made mention about fuel subsidy as well that was removed last year as also part of the reason why we are having an increment in rent and of course in buying houses as well. Everything appears to be tied to fuel. Some even alluded to the fact that if you bring down the cost of fuel today, the cost of every other thing will go down. Do you subscribe to that suggestion?
Yes, because fuel is an essential commodity in Nigeria that it affects every other thing that we do. Actually, if the price of fuel comes down, not only the price of rent or even the price of all other commodities will come down. Because as homeowner, as you are trying to build your own house, if you go to the market to buy materials that you will use to build your own house, you will see that the price has skyrocketed due to the high fuel prices that we are having as a result of removal of fuel subsidy. So that affects the price of the houses themselves itself, and it affects the rent that the landlord will be charging. So I 100% subscribe to the idea. If the price of fuels come down, the prices of houses and the rent will surely come down.
Indeed. Let's look at a mortgage system in Nigeria and try to do, before we do the comparative analysis there, let's look at the FBF, talking about Federal Mortgage Bank of Nigeria, is, like the only institution that offers housing loans and mortgage at a single-digit interest rate between 6 to 7%. Do you think only the Federal Mortgage Bank can actually handle that? I mean, in a country where you have over 200 million people and, of course, a housing deficit of about 20 million.
The fact on ground has shown that FMBN alone cannot handle that. That is why we have a less than 1% contribution to GDP. Unlike if you go to advanced economies, you will find that the average contribution by mortgage sector to the GDP of those economies are between 30 to 50%. I think with that fact, as notorious as it is, and with that fact being established, that was why now we are having some institutions that are trying to come to bridge the gap in financing and in supply of houses in mortgage sector in Nigeria. Institutions like Nigerian Mortgage Refinancing Company, which was established in 2013, is trying to create liquidity in the sector, because one of the problems of the sector is lack of liquidity, lack of long-term fund, because mortgage lending is a long-term investment. You must to get long-term funds in order to invest. So the Nigerian Mortgage Refinancing Company is filling that gap. We also have, as I said, Morphe and their program MRIF is trying to bridge that gap, and they are even offering an interest that is lower than FMB, and because their interest is at 4%, they are trying to bridge the gap. We equally have Family Homes Limited that comes with one program, affordable houses for middle and low income earners to Nigerians in between, I think, $10,000 to $15,000 thereabout, if my memory didn't tell me. So all these institutions that are coming up is because of the fact that FMBN alone cannot handle the housing gap or housing deficit in Nigeria. But still there are a lot to be done, because up to now the contribution of the sector to the Nigerian GDP, as I said earlier, is less than 1%. So we still need more investors, and for that to happen, there are a lot of regulatory reforms that need to take place. Reforms around land titling and verifiability of the land, and reforms around foreclosure laws. Because as a lender, when you lend your money to a borrower, if he defaults, the foreclosure law are very cumbersome for you to recover your money. So there are need for reforms in that regard too, because that is securing away investors from the sector. These are issues that need to be reviewed, and I believe the umbrella body of our association, that is Mortgage Banking Association of Nigeria, are doing a lot in terms of reforms proposal and subsequent follow-up to the government agencies concerned, to make sure that these reforms that are needed to make the sector more viable are actually being done.
Doctor, you also made mention about some agencies coming up there to help the function of the mortgage bank as well. Do you think the interest rates of this sub-agency coming up will be affordable by Nigerians?
Actually, as I said, you see the interest rate of MRIF is even lower than that of FMB itself. So the only problem we have here is accessibility and awareness. Accessibility and awareness. There is need to be financial literacy advocacy by primary mortgage banks about the existence of these institutions and what they do and what they have to offer in order to reduce home ownership deficit in Nigeria, so that more Nigerians can go and access this facility that are being offered by these agencies. And that is what we are doing right now. That is why I appeared on this program, to make Nigerians aware of the existence of this, apart from FMBN that we know, the first institution that was established in 1977. There are other also that are playing key role in the sector. Just like I mentioned, Family Homes Limited, Mortgage Warehousing Fund, and MRIF.
All right. Doc, do you think real estate agencies, real estate operators, do you think they also play a key role in, in increasing the cost of housing that we're having in Nigeria? Because we have multiple of them now who are into housing, building and sell. Do you think they are playing a key role in the current prices of housing that we are having in the country in terms of competitiveness?
Actually, the real estate developers are partners in trying to bring down the housing deficit we have in Nigeria. As primary mortgage banks, we collaborate actively with these developers, and they make access to housing more available to Nigerians, because as a developer, they go and build houses using a title document that will take away the cumbersome nature of acquiring title, and they collaborate with primary mortgage banks to sell these houses back to Nigeria. So I think they are contributing, they are partners also. As you know, it is a business, they cannot afford to a single-digit interest rate. That is why the average interest rate of mortgage loans that is in collaboration with estate developer and primary mortgage bank is in between 15 to 25%. So, like we at Kebbi Homes, we offer our loans at we are in the middle. The interest rate at Kebbi Homes is about 20% for any mortgage loan that we offer to our customer.
All right. As we begin to wrap up the conversation now, you made mention of something earlier that I think is very critical. You talk about the mortgage, loan repayment should outlive the loanee now, the person that actually take the loan. Do you think, is it proper to, if I suggest, can that be put into more something like a legislation and sent to the National Assembly as a bill so that we can, add to the current mortgage law or act that we are having?
Actually, it's his proper thing to do because it will make accessibility more easier. And not only the legislation is one part. Also, there should be more investment to make the sector more liquid, because the problem of the sector right now is the supply of funds. As I said earlier, mortgage loans are long-term investment in nature. It takes you decades to recover what you invested today. And you know, in Nigeria, we have the problem of inflation. So there is need for more government agencies as they are coming up. I'm happy with MRIF program. It's a 1 trillion Naira program. And this program came up during this administration of the current president. And we are happy, all the stakeholders in mortgage industry are happy with the program. We know we have family homes, renewed homes, houses that is coming up. Though that one, there is issue of affordability also. So we need more supply. We need that reforms that will make the tenure of tenure of loan repayment to go beyond the life of the borrower, so that we can consider the life of the house itself. We also need more investors so as to make the sector liquid, so that more Nigerians can access these housing loans and own a home that they can call their own as a basic shelter and basic necessity of life. We are trying as much as we could as an institution to make sure that whoever is in need of a shelter that comes to us, we provide him with one. Unless if you are looking for a luxury, If you said you have allergy to this, you don't like few of your water, if you are looking for a but when you are looking for a shelter, if you approach Kebbi State Home Savings and Loans Limited as an institution, we'll make sure that it is our priority. That was why the forefathers in Kebbi State 30 years back established the institution to make sure that all Kebbi indigents, wherever they are, they own a house. And also recently as an institution, we held our strategy session where we come out with a new vision of the institution. That is to be number one mortgage provider, preferred mortgage provider in Africa. So we are trying to do that, and we are trying to leverage on fintech and technology to make accessibility to Nigerians beyond Kebbi State, so that other Nigerians that are not from Kebbi State will enjoy what Kebbi State indigents are enjoying. All this we are doing with the support of our owners, that is the Kebbi State government and 21 local government of the state. We made funds available to us to make sure that we are able to take care of the need of the Kebbi individual who needs a shelter.
Indeed, a lot of work that you're doing there, and we wish you the very best in your that assignment. It's a very big one and a very big responsibility. Providing affordable housing to your citizens is the best you can do for them. And finally, as we wrap up now, let's look at talking about our mortgage system. The current system that we have, do you think is in line with global best practices? Is it the same as to what we have in America, in the UK, and so many other European countries, or there are a lot of things that we need to improve upon?
Actually, there are a lot of things that we need to improve. If at all the current system we are operating is in line, our contribution, the sector contribution to the GDP of this country will have been in line with what is obtainable in advanced economies. As I said, we are contributing less than 1%. Hugely underdeveloped. The sector is still crying for it. All the stakeholders to come back and pay attention on how to develop the sector. The sector still needs, there is a lot that needs to be done in terms of supply, housing supply chain is very limited. High interest rate, with high interest rate, there is no way an average Nigerian can afford a mortgage loan to own a home. Likewise, the investment. I'm calling for the investors to come to the mortgage sector and invest. There has to be a government-backed investment and a private investment so as to make the sector liquid. By making the sector liquid, it will increase the supply. By increasing the supply, definitely the contribution of the sector to the GDP will equally increase. So we have a lot to do, and it is a work in progress. We are trying to make sure that we operate up to the global best practices, just to be like our colleagues in advanced economies.
Indeed, I must thank you for your time, Dr. Musbahu Ahmad, MD, CEO, Kebbi State Home Savings and Loans Limited, for your contribution on the show today, speaking on housing deficit and mortgage financing in Nigeria, all the way from Brini, Kebbi, the capital of Kebbi State. Thank you for your time.
It is a pleasure being with you. Thank you.
All right, that's a very impressive conversation there with Dr. Musbahu Ahmad. He was able to break down quite a whole lot with regards to the current mortgage system that we are having in Nigeria. And he did talk about the fact that the first Mortgage Bank of Nigeria alone cannot cater for all the housing needs of Nigeria. Of course, as we rightly pointed out at the beginning of this conversation, Nigeria currently has about 28 million housing deficit. That is a very huge number. For us to be able to achieve that, we need to at least build 700,000 housing every year for us to be able to achieve that, and that is going to cost quite a whole lot. The Ministry of Housing is also there trying to do what they can do to, reduce this deficit. It's like my guest did said, is still a work in progress, and we hope we achieve that in the long run. And that is the much you can take on Business Daily today. Join me again tomorrow for more. I am Yusuf Akogu.